as the title sort of hints at, I think PSD2 as a regulation is I shouldn't say it's not needed, but it more than anything gives the timeline to something that is already happening. So that's why the title of this is more than just regulation. My role at Danske is I'm CIO or head of IT for corporates and institutions, including the transaction bank, and that means that I'm running an IT organization, but I'm also spending about 30% of my time going out to these things, exploring new things, finding out new things, and figuring out what is relevant for us as a bank and what is relevant for our customers. Both around regulation, which is obviously a big topic these days, but just in the industry as a whole, and really in society, to put it into a larger context. So, a quick recap on what are the key features, right? And there are many. If you are really keen on late evening readings, you can go through the entire script of what is PSD2. If you're not that keen on that, well, here are some highlights. So it's about harmonization of the stuff that PSD2 rolled out, or PSD1 rolled out, sorry. So the differences between markets, they're trying to harmonize. Now, the second piece is about access to customer accounts and initiating payments from companies or players that are not in that space today. So think fintech in this context. The third piece is about increased safety around these things. The US is probably the most important example to see where or why would you want to have increased security around these things. Well, basically because what they do, and you see some of this in some of the European countries as well, but what happens is customers hand out their tokens or their credentials to their banking platforms, to a third-party provider, who then logs on to these platforms with their credentials on their behalf, scanning through the screens of the online banking platforms as you know them, and picking out the data. So they have an automatic way of viewing your online banking platform. Okay. Perhaps not the safest way of doing things, and there are discussions whether this should be legal or not legal in the different countries. Anyway, this is something that the legislation is also aiming at. The last and the fourth piece here is about the one-legged transactions, so to speak. So PSD1 only covers transactions that have both the receiving country and the sending country within EU, whereas PSD2 says that even if, as long as just one leg of the transaction is within the EU jurisdiction, it will be covered by PSD2. So it sort of geographically widens it quite dramatically. So think a transaction between, say, Germany and the US will be covered by PSD2, not so by one. Very, very short. There's even, for those of you who don't even want to read the 4 bullet points, here's an even shorter summary here of what's super important. That is the standardized access, right? And some of you may have attended the lab discussion down at the other corner just an hour ago, where they talked a lot about whether it will be standardized or not. I think the jury is out still, right? There's a deadline for PSD2 going live in January 2018, but it's quite clear already now that that will be a very soft live, right? Not everything will go into hard live, so to speak, from January. In fact, not much will. A lot of it will linger into 2019 and beyond. Anyway, so the very, very short thing, standardized access to account information and ability to initiate payments. That's all you need to know. And really what I am going to focus on here is this piece. The other 3 are reasonably self-explanatory, though the implementation will take a lot of time and have different characteristics from country to country as I see it. And this is the big question of this presentation. So why would banks want to do more than just comply? Because typically a bank would just be compliant and then do nothing more. And I think in this case of PSD2, that is really, really unwise. But let me illustrate this. So essentially, the banks would have 2 extremes that we can take on this. And it's either on the right-hand side or your left-hand side is just listen to the regulator and do whatever they're telling you to do. Traditional approach. then you got to listen to the world, right? And I will argue that what is happening in society is something that banks need to listen to much more than what the regulator says. At the end of the day, if we comply with regulation but we have no customers, it will not be so interesting. Okay. So, what are the key societal shifts that I see that are underlining this whole thing? So the first one is smaller, niched, interconnected services. So think about your iPhone or your smartphone, where you have a number of different apps. Probably, if you're anything like me, somewhere between 50 and 100, that together sort of help you live your daily life. As a treasurer, you would have the same situation in the future. You would have to source different services from different providers. That is just the way society is going. And even if you feel that this is something that is really, really difficult, it costs a lot of money to shift from one to the other, yes, that is the way it has been. Not so much the way it will be. In fact, it will be pretty much like you know it today as you shift from one app on your smartphone to the other. The cost is not that high. You just need to create your credentials and then you go, pretty much. And many of them interconnect too. So you will find, for example, the same thing. When you log into a new platform with a new app, today you often have the choice to log in with your Facebook credentials. And it picks your pictures up, it picks your friends up, picks everything up. So the threshold to enter and start using something new is going to come down dramatically. So get used to this if you're not already. Smaller, niched, interconnected services. This is a big challenge for both banks, ERP providers, treasury management system providers that today bundle and pick together and provide themselves a big package. I think those big packages are deemed to be sliced up, and they will be challenged in component by smaller players. The next one here is another thing, right? You'll recognize this from your own lives as well. User experience is king. If you don't enjoy using a particular application, a system, whatever it might be, you're not going to stay with it. Especially not, as I said before, when the cost of shifting is going down, user experience is going to be king. Right? No question. Third one is things go viral. With the way we are connected today in communities, by social media, or in user groups, or whatever it might be, things tend to pick up very, very quickly. Okay? So a new thing gets launched, and it almost, in a matter of days or weeks, get an immense following. Okay? You see this in some presentations that I do. I show a graph of how quickly music videos hit it on YouTube, and if you follow the trends, it is shorter and shorter and shorter. And nowadays, in a matter of 2 months to 3 months, you get 1 billion views on those things. So things go viral. It's just a trend of society, and it's going to be hitting this industry as well. In that, okay, if you have new challengers coming out with new offerings, as I said before, the niched, nice little things that allow you to do things that you've not been able to in the past, they are going to go viral. Okay? The uptake is going to be immense. Now, the decline is also going to be equally quick. These things will have to come and go in a much more aggressive sense than what they have before. The half-life of any component of your treasury setup is going to be shortened like you couldn't imagine. Okay. The fourth one is about evangelists, and it could really be an Apple logo in this one instead, right? Because you have people who are really, really attached to different things, different brands, different products, whatever it might be. This is also going to hit this industry, right? We're going to have people who go out there and aggressively carry things with them and have a strong preference of doing things a certain way. All of these four are the societal shifts, or at least the four key ones as I see it, that will make it much more interesting for banks to to comply with PSD2 or actually do what society tells us rather than what PSD2 somehow sets a timeline to. Okay. Now, so if I look at, so think about the 4 different categories that I just showed, and then envision the bank of your choice, right, in the future. What would good look like for a bank? So imagine a bank that offers APIs and interconnected services well beyond the minimum requirements of PSD2. Back home, I challenge my developers and my IT staff saying that I think that in 5 years from now, the functionality that is on our platforms that our customers use, 50% of it will not be built by the bank. It will be provided by somebody else to our network and our platforms, and really our ecosystems, right, if that's how you want to put it. Now, as I said, this will provide something that is so much stronger than what the bank can offer today. We are, as anyone is, restrained for resources. We can't develop everything that we would like to develop and provide to our customers. We have to prioritize. In the new world, we wouldn't have to prioritize that hard because we can source a lot of it from outside. We don't have to build everything ourselves. Okay. Now, the internal side for a bank of this is that as you open up your platform and as you're able to take on external content, you then by definition have also created a platform internally that allows you to act much faster. So you'll be able to deploy things much faster, you'll be able to integrate your own systems much quicker, you'll be able to develop new functionality much quicker, and it will be much, much cheaper for us to maintain. Next thing, so then this great bank continuously invests in user and customer experiences. Right? Convenience is really driving our behavior more than any other period in history. Right? What is convenient are things that we adapt. Think about simple things like, say, your iCloud. I suppose many of you having an iPhone, you typically get to the point when the memory is full on your iPhone and you submit to the temptation to just store it on the iCloud. Right? Super convenient. But if I had told you 5 years ago that in 5 years' time you'd be readily, happily submitting all your life's contents in form of videos and pictures to an American corporation that they will do what they please with somewhere out in the US, you wouldn't. Right? But we give in to convenience. We constantly give in to convenience. And that is why user experience is going to be king again. Right? Banks that realize this and actually is able to shift as these trends shift as well, because good user experience is not constant, quite the opposite. The good bank in the future will understand this and will live with it and will shift as these trends shift. Then imagine the bank that has moved from a provider of financial products to a facilitator of commerce. And this is where the ecosystems come into play. And I think if you look at industries like trade finance for us, right, there's a whole ecosystem around what happens in ports with all the papers that need to go from instance to instance to instance to get rubber stamped, and then payments have to go back and forth and things are held back and so on. And there are good examples out in Asia where they are really making progress on these, where a bank steps in and takes, with the payment as the outset, starts to optimize the flow around it as well. This is what I think a bank will need to do to a much greater extent in the future. And the technology that is coming is going to allow and enable us to do it. Right? We need to leverage everything we have and everything that is ancillary to what we have to eradicate customer pains. That is going to be the business model in the future. Last piece, so somebody, imagine a bank that is actually using all the data that we now collect from all the other components and try to feed that back to you as customers as insights. At the end of the day, we sit on data that you don't have. And if we allow ourselves to do all the other things here, that universe of data is going to be super enriched. And if we start leveraging this together with our customers, we can create marvels, right? And the fact is, we can do much more than what we can imagine today, because with the power and compute power of AI and all those things, right? This is going to be beyond our imagination, quite frankly. It's almost, there's a prediction saying that in 2023, for $1,000, you can buy the equivalent compute power of a human brain. And that in 2045, at $1,000, you buy the equivalent compute power of all human brains combined. Okay? So this is not too far out when we can actually, if we choose to invest a little bit more than the $1,000, we can do a lot with the data that the first three quadrants provide us. Okay? Now, of course, to us it's very important as well to do the best advisory services that we can ever do, right? And that is something that we will be able to do much more of and much better when all the other components of the puzzle are in place. Okay? So this is what you should be looking for in a bank, right? And I see some of my colleagues here as well, and well, there's the challenge. Okay, this is what we will have to do. So if we now sort of shift a little bit over to the treasury side of things, so that was about what is in it for the bank and what's going on in the banking, and why would a bank want to do more than just comply. This is then, what will it mean to the treasury? What options would you have? So the first one is, of course, you can do nothing. You can wait and see. Whenever this future that this crazy guy from Danske Bank is talking about is coming, we'll act on it then, right? You don't need to do any investment short term. But you kind of risk being left behind in the medium to long term. Then you got the other extreme again, is really to go out and allocate resources and bandwidth and people and what have you to take ownership of this change. Now, this will allow you, if you're out there and really understanding what the full offering is of all the components that I've mentioned before, then you will be able to have a massively improved service offering. You would have the best components in a treasury universe that man can get, right? And you could do marvels with it. Of course, you could bring a lot lower cost compared to the computer industry, where you have the concept of open source, where you basically have operating systems and applications and so on for free, because developers kind of want to develop them for free. If you're quick on your feet and you know what is out there, you're going to be able to source the early startups and the quick movers and the cheap ones and integrate them into your portfolio of services and offering. So you would achieve lower cost. You would have massively improved integration, because as you do this and as you practice, the integration between all these things would improve dramatically, and supported by things like cloud, right? A lot of the system providers are moving into cloud, and to an extent it's overrated, but the fact remains that, okay, when everything is out there, it is almost by definition already integratable to a much larger extent than it is today. Now, the downside of this approach is that it will take quite a large investment of resources and time for you to be able to source the market, understand what is out there, how it fits into your model, and what you want to do with it. It's a full-time job of more than one person, let me just say that, right? It's a big ask of anyone. The third option in this is to partner up, right? And I think what it gives you is it gives you similar benefits to the full ownership. You have somebody you can partner up with, who can help you with the scouting and try to pick out, knowing you, what would be important to you. It would require quite dramatically less investment in resources and less internal competencies in your organizations. And in my opinion, I think banks are obvious natural partners in this. Because, what I said before, we have to do this. Not just because PSD2 is coming and imposing a timeline, but this is what society is driving towards. So whether you like it or not as a bank, this is what is happening to our business model, and we need to adjust with it. You need to adjust with it. So I think the obvious choice is to partner up, right? To me, this is almost a no-brainer. Of course, you have the ones who want to be exotic and really drive it and understand it. Then it's almost like a conviction, a religious conviction of the treasurer to do it. Otherwise, you will be hard-pressed to do it. Right? It will require a lot of resources. Good. Now, if we then assume that the partnership approach is a good one, then what should the partnership look like? So, you need to challenge your banks and you need to work with them. They need to understand you to be able to provide value to the table or bring value to the table. You need to figure out which banks are up for it. I read a study from one of the consultancy houses the other day, and it says around about 40% of the banks really play defensive on this and say, we're going to comply when we have to comply, we're not going to go beyond, we're not going to go before, nothing else. It's bare minimum, okay? You need to figure out where your different banks are. Right? Work with these progressive banks to make them understand your problems. What is important to you to have solved, to get the banks to partner with you and really figure out what are your problems. Okay? This is what if you are a fan of sort of agile at scale frameworks and the likes, this is what you label co-create. A very fashionable term in IT these days. You need to set expectation on the banks to do more than simply offer yesterday's product. So this is about being a facilitator of commerce rather than a pusher of banking products. Okay. The progressive banks will realize that they need to transform. Right? You have to put that out there and you have to expect it from your partner. We've been doing it now at our bank for a number of years, really trying to turn things around and move away from the product-oriented approach and really put the customer in center of everything we do. This is all about that, and you need to demand it. Okay. Push banks to cover ecosystems that address a broad range. This is what I said before. So you need to push the bank to go out and solve entire value chains or solve small subset of your entire ecosystem of problems. Take the ports again for an example, right? Or take logistics for an example, just to take it to another level. Production, working capital, whatever is included in that in your use case, you need to challenge the bank to go and take a stab at it. Okay. So I think what I'm trying to say is that for a treasurer, the whole relationship with the bank is going to be challenged, and I think you need to be a little bit more demanding and take an active stance in what you expect from your banking partner. So life is not going to be easier for either part, right? But the fact is, society is changing. We all need to change. Just to conclude on what I've been talking about now. So, the shifts in society are opportunities, okay? Make no mistake. If you sit about and wait, you won't be able to just continue life as is either. There are huge opportunities out there. If you want to be progressive, if you want to be a top-rated treasury, you have numerous opportunities. Same for a bank. If you want to be labeled as a progressive bank, somebody who's easy to deal with, you need to go out, right? It's what society demands. Forget about the regulator. Treasuries will need deep understanding of where the opportunities lie. It's not easy to source all the different opportunities and niche players. As I said, it will require a lot of time, a lot of effort to do it. But my bet is that it's really going to be worth it. You will be left behind if you don't. And as I said, banks can really provide help in this, and we have a very, very large incentive to be helpful and get this done. Okay. So, this is as far as I was going to cover. If any questions, you can grab me right after this, or you can grab us at the Danske stand, sort of 50 meters that direction.